Hello and welcome to our daily market breakdown. And today is not just another breakdown. Today is a special day because today we are going to have NFP. So let us dive deep into it. And before we get into it, make sure you're liking and subscribing. And let's go. So today we are going to get mostly news from the dollar. And to begin with here, you can see that we have the average hourly earnings for month over month expected to come at 0.3%. We have the core retail sales expected to come at 0.1% and the big bad NFP to come at around 58k. New payrolls added. So what does this mean? If we get something that beats the expectation, so if we get anything above 60k, 70k, 80k, this tells the Federal Reserve that the economy is actually very resilient and perhaps we do not get those rate cuts until later in the year. But if we get anything lower than 58k, so let's say 50, 40, 30k, going on downwards, then this tells the Fed that the jobs market actually needs an intervention, and the only way to do that is actually to cut those rates. And this will perhaps lead them to cut those rates earlier than we are actually expecting. But remember, the market is not very linear because we have other factors also affecting this rate cut decision that we might have next. And this is because of the US Israel Iran war. So that is something as well we are going to actually tackle here today and understand what we have going on. So let us look at this very fast. So this is the part where we break down all these pairs. Starting from the commodities, we are going to go to equity indices, we are going to go to Forex, crypto, and then stocks. And as we do this, I need you to actually pay attention on a few things because we are not going to go linearly. We are going to actually interconnect them and jump from here to there depending on if they have correlations. So starting off strong, let us look at silver. Silver has a few factors affecting it. And with silver, we know we have industrial demand and we also have safe haven status. So with silver, we are actually trading today at around 84.2660 to all about the highs of 87. So that is the range we're actually stuck in, and we're seeing the market just auction around these prices. So what we're expecting today is that if we get a strong job print, so anything NFP above 60 as we have talked about, then perhaps silver might start to see some moves to the downside. Why? Because if you're not getting any rate cuts, then those moves into silver that are mainly due to the fear of inflation and safe haven demand then start to go away. And perhaps we start to reprice silver based on its fair value and not only because we are buying to protect ourselves from things like inflation and things like war. Looking at gold, it is literally the same story, but with gold, it is a bit different because gold is mainly just a safe haven commodity. So looking at gold here, it does not have a lot of industrial demand. So with gold, it is mostly moving due to the safe haven demand we're having here. And gold is just shy all-time highs, a few $100 here. And you can see that today it is suffering a little bit and cooling down, maybe waiting for that jobs data. Remember, gold usually moves higher during rate cut seasons. Why? People are actually protecting themselves from inflation, and the best asset to put your money in terms of high inflation is actually gold. So what do? They actually predict the move way before. So the market does not actually wait for the thing to happen. So this is how it goes. The Fed is cutting rates, which means inflation will go higher. And if the Fed is cutting and inflation is going higher, what this does is that it brings a situation where you as an investor will start to look at ways to actually protect yourself from this inflation. And what do? You invest in things like gold or buy things like REITs, real estate, and things like that are actually historically proven to actually outdo inflation in any type of market. So you need to start knowing about these things and start pivoting and moving accordingly. Looking at something else here, let us look at oil. So oil is a very funny one, and I wanted to talk about oil a little bit because this one is the one that is mostly affected by the US Israel Iran war. Why? Iran actually exports about 20% of the global oil supply, which is a lot of supply because this usually comes from around the Strait of Hormuz, which is a passage through where oil is actually exported from through the Middle East. So once this place is blocked, it actually leads to a huge shortage. And we're now starting to see why it actually made sense to capture the president of Venezuela. So Trump captured the president of Venezuela, Maduro, so that he can actually have control over the oil in Venezuela. So now perhaps we might see a pivot or a move where we see the President of the United States actually declare that now they are going to use that oil carefully, and all the United States companies that were actually in Venezuela perhaps might start now to export this oil very fast and very swiftly and say, you know what, now let us save everybody from all this conundrum. And might we see this after oil has reached record breaking highs, or will we see an intervention very, very fast? That is the part we do not know. But what we know is that you need to stay steady. You need to actually stay very, very alert, wait for the opportunity to present itself when Trump says that now we are ready to intervene. And then is the point that you perhaps start looking for shorts in oil here. Looking at equities. So let us jump into equities here very fast. Looking at the NASDAQ. So the NASDAQ is a very fun one because we have been trading in this range for quite a while, but for a period of time now, we have been stuck in the middle of this range where you know that we actually do not trade in the middle of ranges. So if you are part of our community, you know that we never trade in the middle of ranges because the market usually is very, very choppy in the middle. You can see here on the exits, on the peaks, we actually have very swift and very large moves. Look at that. That move went and this one went. So we'll need to wait for price to actually come back down to around the 24K level here. Then we might be actually interested in moves to the upside here. Or perhaps if we get moves to come back down here, perhaps a breakout here, we do not know what is going to happen. So based on what is going to unfold, remember, this war can last a very long time. Even with the Russia-Ukraine war, people are just speculating and say, you know what, this will only last a few weeks and then it will be done with. And now we are almost 2 years in, I think. Not two, actually. Yeah, almost 2 years in that war. So it is a crazy thing to think about that that war has actually lasted that long. Remember, Russia also has a very huge oil supply, and that was cut from Europe. So Europe has been suffering dearly. You saw that the stock market in Spain actually dumped a very huge amount. Why? Because they now have oil shortage, and this comes with a lot of inflation. So people are actually moving away from equities around Spain. Looking at the dollar, you can see that the dollar had these huge moves here to the upside, followed by a small pause here. So this small pause that you're seeing around here, this is very, very crucial. It tells a very big picture that the market is pausing to wait for NFP to come out so that they can make their next move. The whole point here is to predict or try to align ourselves with the rumor if the Federal Reserve is going to cut or hold or actually raise those rates, which is actually not looking very likely. But remember, it's never out of the table. We saw surprise rate cuts from AUD here not so long ago. So the Reserve Bank of Australia gave us surprise rate hikes because that inflation was becoming too much bear, and they needed to intervene as swift and as fast as possible. Looking at the stock market here, which is the S&P 500, you can see what is happening. You can see we are stuck here in this range here on the upper side at around the range starting from. So let us just draw our lines here very, very quick. So we have this range here and we have been stuck here for a while. So we are not seeing any breakouts to the upside or to the downside. We are seeing, so right there. So we are seeing bulls step in. So maybe you can extend this range so that it goes all the way to the top. So it makes way more sense. And perhaps we can draw two ranges here. So the first one here, and then the second one here. And this one now makes way more sense. So you can see that we have a very, very funny scene here where we have almost two ranges. Right now we are stuck in this upper range right here. We are not seeing any further retracements on the S&P 500. Perhaps it is being held by companies which are actually giving a lot of good prints. So we saw Nvidia just the other day give a lot of good prints. So they are actually beating earnings expectations, and that is good for the stock market. You would expect that to make the stock market rally. But no, the S&P is actually weary because of all this uncertainty, and the stock market does not love uncertainty. If it is one thing that the stock market hates, it is uncertainty. That is why when we have anything that actually threatens the earnings in the stock market, investors move fast and swift and pivot away from the stock market. And this is something that you need to keep your mind on. Looking at something else here, so let us move very fast into. So the Dow, we're not going to look at the Dow so much, but just go through it very fast because the Dow has had a bit of movement as compared to the rest of its peers. So look at the Dow. Here we have a huge, remember these are growth stocks and not speculative ones. So they actually depend a lot on how the economy is doing. And that's why the Dow is a very good measure of how the market is doing. That's why you hear during the economic crisis, we do not say that the S&P 500 dropped, I don't know how many points. We actually measure it through talking about the Dow, because the Dow actually gives us a very clear picture of what is going on. So we actually focus on the Dow mostly and not any other thing. So looking at the Dow, this one holds a lot of growth stocks and it is actually weighted. So this is something you can keep your mind on. The Dow is weighted according to share price and not according to market capitalization. So if the share prices of these companies are dropping, you expect to see this one dropping heavily as well. So looking at this one right here, you can see the Dow is just in the same predicament, but way more worse, because the Dow can drop all the way to these lows of around 45k, which is now looking way more possible than you might have expected. So what could make the Dow drop here today is one thing. If we get uh, numbers that suggest those rates might stay higher for longer, that is bad for the Dow. So the Dow does not want those rates to remain higher for longer, and hence the Dow will actually see a drop here today. And remember, we are just speculating here. Nothing is actually written in stone, and nothing I say here is actually financial advice. So just keep that in your mind. We're just speculating, giving you ideas on how to look at the market, how to approach it today, because that is very important for you to have an idea. Looking at the Euro GBP here, perhaps we might now start to see that move to the downside as we had expected, because the Bank of England is not looking to cut those rates anytime soon. So that is something we might keep our mind on here today. Yesterday, we were looking at entry shorts here, and perhaps we might get an idea as to that. Maybe we might have to wait for a breakout of this place right here. So this support zone right here is something you can look at, and that will be amazing. If you can get a breakout somewhere here, then perhaps a retest. So let us just make sure we put a marker here so that we actually remember what we are looking at or looking for in Euro GBP. So something like that will actually interest us. And we are not going to just throw the kitchen sink at it and put full margin on our account. Of course, we're going to enter with very minimized risk, because the market right now can pivot very fast. I almost say shivot or pivot. What was I going to say? I wanted to say shift and pivot at the same time. Remember, my mind moves very fast. That is something you're going to have to bear with me here. Looking at the USD card. So this one we talked about in our live sessions. Remember, we have live sessions on Mondays, on Wednesdays, and on Fridays. So if you want to join some of these live lessons, make sure you head over to www.omnimarkets.academy and you can sign up for as little as $20 a month. You actually get access to this one for the entire month. Remember, how many sessions are those? You can calculate. We have 4 weeks in a month multiplied by 3. So you have 12 sessions a month where you get to join us. But if you cannot afford it, remember we have free options, live options, where we go live every now and again and we break down the market. And of course, you can just be liking and subscribing to this, and you'll be getting updates on when we drop videos like this. So I'm going to try and update the frequency, so post them daily so that it can be easier for you, because I was one day at a point where I could not afford things like that, and I don't want to be that guy who now goes to the other side of the barrier and forgets the other side. So remember, I got you. But if you can afford this will be very much good, because you get access actually to someone who can guide you into these things. So make sure you look into that. But just continuing here swiftly, looking at USD card, you can see that we are actually in a very nasty range. This is how I can explain this to you very fast. So we have two forces pulling each other. We have the geopolitical tension happening because of the war, and we have the Canadian dollar strengthening due to the fact that we have oil as a major mover of the Canadian dollar. So Canadian dollar is a commodity currency, so it moves heavily depending on how oil is doing. When oil is doing very well, you expect the Canadian dollar to strengthen. When oil is stabilized, then the Canadian dollar can be affected by other factors such as their monetary policy, etc. But the main driver right now for the Canadian dollar is the fact that oil is strengthening. So you're seeing these sharp moves to the downside, even though this dollar is actually strengthening due to safe haven demand. But the Canadian dollar is also strengthening due to the fact that oil prices are actually shooting to the upside. So we have this interesting tug of war, and this is causing this choppy market here, and investors do not know what to do with it. So they're actually mostly just avoiding it, and that's why the choppy price action you're seeing here. So the best thing to do for you as an investor is to wait for more factors to actually favor one or the other. So today in NFP, you might get perhaps those rates to stay higher for longer. This will actually strengthen the dollar and perhaps moves to the upside if we break this trend line right here that I've already drawn for you. So if we break this trend line here, we will be interested to long-term moves to the upside. Or if we get numbers that are very weak, which could lead to the Federal Reserve looking to cut rates, this weakens the dollar, and hence you might look for continuations here to the downside. Remember, we are in a heavy bear trend right here, right in the USD card. So if we get those numbers to come in very, very nastily low, something below 50K, then perhaps we might look to enter here after a breakout of this nasty range. You don't want to trade in this zone. So let me mark it red here for you. Remember, never trade in this red zone here. So by all means, regardless of whether you're going long or short, avoid this nasty range here. You're going to be wiped out. Your account is going to go if you try to trade in this range. So just wait for a breakout to the upside or perhaps a breakout here to the downside and you will be good to go. So that was nasty line, but you get the point. So just wait for that and you will be fine. So we are waiting for a breakout and a retest to go to the downside. So the retest can be a weak retest or it can be an entire structural retest here. Regardless of which one it is, you decide because you're the one taking the risk and your stop loss should be somewhere up here. So this is the trade idea for USD CAD. Your stop loss should be at the top of that range. If you get to the top of that range, that trade is not valid anymore and take profits around there. So around 2 around 2 to 4 risk to reward ratio. So that is not very, very bad. Can look into that very, very fast. Let us move swiftly to the dollar Swiss. So the dollar Swiss is another interesting one that I'm not touching here today. I'm not going to break this down. If you want a breakdown of this, you're going to have to join our live sessions. We're going to break down the dollar Swiss because it is a very interesting one. So remember, just go to www.omnimarkets.academy. The dollar yen as well, we are breaking it down here for our members in our community. Let's look at the euro dollar here very, very fast. Structurally, you can look at this and say, you know what, we are having this correction right here. Looking at the bigger picture, we are stuck in this range now once more. So perhaps we're looking for shorts down to the bottom of the range and perhaps longs after we get to the bottom of the range. Because the euro dollar usually corrects very much. It is very hard to find euro dollar trending. It usually moves like this. So it goes to the top of the range, it comes all the way back down. And you can see it even if you look at the higher time frames. You can see very rarely we see these moves. This one are very, very rare moves. So if you go even higher, now you can see the range starts to form. So you can see we are almost at the top of this range and now we are correcting. And this is actually very, very interesting. In Euro USD have never looked so much sweeter. So what we need to see is price perhaps touch this bottom here, right? So if price, you know what, price can actually come all the way down here if it wants, because this is euro dollar, just depending on what the Federal Reserve will do. So this is one I'm going to keep an eye on, and I'm going to update guys in our community. Just remember, again, head over to www.omnimarkets.academy and you can join and be a part and catch these moves with us. For the pound dollar, perhaps I might stay away from it for now, but I can tell you for the short term what we are looking at. We were looking at these buys right here, but now, looking at it right now, depending on what the dollar will do today because of the NFP data, we are going to perhaps pivot to either longs or shorts after that. So for now, we are going to actually close these trades because we need to protect ourselves from the volatility of the NFP. So we are not going to have any open positions while the NFP is going on. Looking at the pound yen, this is another one we have saved for our people in the community. The NZD USD, the same, and all these other ones. So for these ones, you're going to have to actually join and enjoy with us. So I have saved those ones for our people in the community, which I'm going to go live very, very soon. We're going to actually be live for NFP. So if you watch this before that and you actually want to join, again, just remember, head over to www.omnimarkets.academy and you can get it for a very cheap price, an entry which is a monthly fee. So very, very cheap. It is the lowest in the market at the value you're going to get, because remember, you're going to get access to me, who is going to actually guide you through this process, and you're going to get access to our weekly webinars. We are going to do 3 of them each and every week. You're going to get access to our entire courses at omnimarkets.academy. So whether you are a beginner, whether you are an advanced, an intermediate, we have courses for everyone. Because remember, some traders actually trade for a while and they do not focus on fundamentals. So in omnimarkets.academy, we actually focus on fundamentals, and we are going to teach you those things. So just head over there and you know what to do. If you're looking for a broker to trade with, we actually have our recommendations down in the description. And for you, I'm actually going to give you access to this tool right here. So if you want access to this tool, just follow me on Instagram at Gaffy_official, and I'm going to give you access to a free trading journal. So just do that and make sure you DM me, and I'm going to give you access. Just tell me you found this video through YouTube and now you need access to this trading journal. Remember, this trading journal is the best in the market. So what you need to do actually to get it for free is just go and sign up. So let me do this real quick. So just go and sign up. Let me see if I can open here very fast. Perfect. So just head over to, if you want to get it, just DM me on Instagram. And once you sign up, I'm going to take you through the process of getting it for free. But if you want to get it for paid as well, just head over again to my IG at Gaffy_official and DM me, and I'm going to get you a very good price for this, so a very huge discount, because this is pre-launch. Once we launch this tool, it is going to be a paid only tool because of all the interesting things we're going to put into it. Just think about it. This trading journal actually connects to your MT5, which means that the only thing you need to do is add your MT5, and it actually journals everything for you, takes screenshots and everything. So all you need to do is just get a notification. You actually add your mode. So how are you feeling while taking this trade? You can add notes, you can add video notes, you can add voice notes and all those things. So this is the best in the market, and you can get free access for now. All you need to do is follow me on Instagram and send me a message, because once we go live with this tool, once we actually launch it officially, you might not be able to get free access. And remember, if you're getting free access, you're getting an entire year free access. So it is not just free and then once we launch, the free access ends. No, you're getting free access for an entire year. So that is something you can look into. And with that said, thank you very much for watching until the end of this video. If you have watched till the end, then now you get that free gift of a free trading journal. Anyway, we have reached the end of this video. Thank you for staying with us until the end, and it's your boy Gaffy Official. You can follow me on socials or you cannot. That is entirely up to you. But what I can tell you is that thank you for being here. Until next time, let us meet when we can't avoid.